Good afternoon, traders. Welcome to our 1 week free educational webinar where we're all the basic stuff you need to know about Forex. You can get it here pretty much for free. You don't have to pay for that, and you should never pay for it anywhere else because the educational stuff is free. You can find it everywhere. And truly, a lot of people come on my chart and say, well, you don't have to pay for Elliott Wave. It's free. Of course, it's free. We are not charging you for Elliott Wave in my educational course that I do. It's not about the knowledge we charge you for. You pay for my time to train you. Just so that the people who will be coming here with ideas to go back on my chart and write nonsense. Remember, when I charge for the course, I'm not charging you for the knowledge. I am not charging you even to be in my group. I'm charging you for 6 weeks of my time that I would spend with you to train you. And my time has value. Believe me, that value, if you divide 6 weeks by the cost of the course, it's absolutely cheap for you. That is what you pay for. If you go to work somewhere, even if you're working as a security guard where you just stand up, they give you a stick and you stand up, they pay you for that because your time has value, right? So please don't go on my chart and write crazy stuff. I'm not doing this webinar for craziness. Let's go. Today, guys, we're doing pin bars. So what is pin bars? Let's start with immediately. What is pin bars? Here's a concept. You guys want to know, pin bars is actually a bar with a wick on it, right? A candlestick with a big wick on it. So what is the concept behind it? Why people trade it as a strategy? The idea is that if you have a very sharp move up and it reverses itself very fast, the candle forms a wick at the top or at the bottom. A very fast reversal and the candle forms a wick. So it means that price was going up or down, but then there was a huge volume of the opposite trade that came in, the opposite contracts, sells or buys, and that creates a wick. And because there's a wick in the chart and there's so huge volume came in, traders have the idea that this will continue to happen. So if you have a huge wick at the top here, then because they're saying the sellers came in, which doesn't necessarily mean sellers, it means sell orders came in, and it could be coming, those sell orders could be coming from the very guy who had the buy orders there, which is the bank, the market makers. The same guy who had the buy orders is the same guy handling the sell orders, right? So a huge order was filled. So the market moved to an area, found a huge order, filled the order, and couldn't fill the order completely, right? Reverses the market because there's a buy order that cannot be filled. If they fill the buy order, the market will keep moving up. But because they couldn't, the market is coming down to look for where there are sell orders. And when it hits those sell orders, it's either going to go back or it's going to go down, right? That's the principle of how the market works. So the concept of the wick is that there is so much order coming in into this candle that it will continue to go down. Now, sometimes, remember all these strategies that people are using here, the reason they're using them is because sometimes they're true. Sometimes it's very true. If the market is at a peak in the structure and a wick appears there, yes, that may be the reversal point of the market. But if you look at the entire structure while the market is going up, you may also notice that there are also 50 different pin bars in that structure going up, right? So if there are 50 different pin bars in that structure and you try to sell every single one of them, you may end up losing a lot of money before you hit the right one and the market reverses, right? Is the sound okay? Why are we discussing it in the thing? Can everybody, okay, not everybody answer. Is there a problem with the sound? If you're getting a problem with the sound, give me.
No, there's one person that has a problem with the sound.
Okay, good. So let's move on. I thought it was problem sound. Great, let's go. So I'm going to take one piece of a chart and show you how much pin bars were in there. And that if you were trading it as a strategy, you would end up taking about 6 losses before you eventually get to the one that turns the market, right? Where that really big order is turning the market. Now, that is what you need to know about that. But there's another problem with pin bars before I move on to show you. There's another problem. The problem with pin bar is that it's actually based on the design of the chart. Because if you're trading a line chart, you will not see a pin bar. And remember, pin bars may appear on one broker, but it may not appear in another broker. all of that depends on what time frame you're looking at the pin bar. If you're looking at a 240 and a daily, you can have false information because one broker may open his candle, let's say London time, Greenwich Mean Time. Another broker starts his candle in New York time. And those may be different times. So you may be looking at a 4-hour candle on one broker with a huge wick, and you're looking at a 4-hour candle on another broker that is a solid candle closed. So you've got to take that into consideration as well. That not all the pin bars are giving you true information. And I know some traders love to trade it. Well, the reason they love to trade it is because they don't know all the things, and they don't want to try anything new. They don't want to keep learning. They don't want to, open their minds to new things that are working or to something else. So some trader may say, well, hey, look, you had a wonderful pin bar here. It actually moved the market up, right? And I'm going to say, yep, that looks very good. But what if we go all the way to the top of this structure and see how many of those pin bars we had? So the daily may be hard to find a lot of them. Let's go on a 4-hour. That may be easier to find because there will be more charts on the 4-hour. And since we are in this chart, we will stick to this chart. And you're going to see that here was a pin bar that did not move the market up. The market actually came lower, right? Here is a pin bar that did not, 2 pin bars actually. Here is one that did not really, this slightly moved the market up, but the market came lower. Here is one that brought the market a little down, but the market went higher. So if you were trading all of those stuff, look, I'll show you a number of them that actually didn't even move the market a bit. Look at this one. The market came back right down. If you were selling these two here, when they appear, let me just put them like this. When this one appear and that one appear, if you're looking for pin bars, when this one appear, looking for pin bars look like downside, look what happens. It goes higher. If you thought you were at a low here when you got that pin bar that is going to go up now, you're probably going to be surprised. This one went lower. So if you look at all of them separately, look at this one. Very, very strong one, right? You can look at this and say, oh, here we have a nice one and here we have a nice one. The market is going to reverse. I'm selling. Well, you may be in for a surprise. The market went higher. So you have to take every single one of them into consideration. You thought that was a reversal one? Well, look what happened. Came down a little and right back to the top. You want to see how many of them in here? Look at this. You want to trade any one of these, any direction? I don't care which direction. Just pick your choice because you're going to lose the trade. And you know why they have so many of them in here? It's because the market is in a consolidation. And when markets are in consolidation, if you remember the basic theory, I think all of you here, you have sharp moves up and you start to do this. If you're going sideways like this, you're going to have a lot of pin bars at the top and a lot of them at the bottom, but trading them will be dangerous. Because by the time you get into the trade and you put your stop, the market has already moved and come back to take you out. This is where a lot of traders lose their money. They get confused, they leave the market, and then they watch the market do that. Because they're trading something that is not sustainable. It's not a strategy. It gives you some information, like this one. It gives you information that an order came in. Huge order came in here. You bought exactly here. It goes up like that. The order came in. It goes the opposite direction. It goes up back a little and then go the opposite direction, take you out. See? Because it's going sideways. The orders within that level are controlled, right? When a market is in a range, those orders are controlled. When the market makers decide that they've moved away from the zone, they're going to find a range in which they're going to trade. That is the accumulation range. That is the range where they're either buying a currency or selling a currency. Depends on whether the market is going up or the market is going down. Right? That is the range they're going to do their accumulation. Because if you want to sell the pound, you first have to buy the pound. You first have to buy a lot of the pound if you're going to sell a lot of the pound. Right? It's that simple. They don't trade the way we trade. We are speculators on the price. They actually trade real cash money. The hard currency are converted when they convert. We're actually speculating on the price. We're saying the price of this is going to go up or it's going to go down. We don't really have hard cash selling and buying in our currency. The bank loans us and the bank does transactions for us. So literally, we're like speculators in the price, and they're actually dealing with hard cash. So once they get it in that zone, you're going to have a lot of pin bars. And you don't want to trade any of them because you remember, like I said, if you got into the right point, you may be lucky and it will go. But you're going to take about 10 trades to figure out which one was the right one. And you don't have to believe me on anything. Remember, I'm not asking you to believe anything I say. I'm asking you to go and test it. I'm asking you to go and look at charts of people who trade pin bar. I don't. So you can look at my charts. You wouldn't see a strategy that says trade pin bar. But if you look at people who are pin bar traders and go on their charts and said, let me look at your last 200 charts and see how many of them actually were pin bar trades and how many of them went. And then you get a big surprise. I'm not telling you about those that are post after the fact that, hey, look, I took this, I sold this pin bar. You know, some people like to come after the fact. Oh, I bought into this pin bar here and you see how it went after the fact. Well, I'm not them, but I'm telling you about trades that they actually forecast and post before time and said, here is a pin bar I'm buying, how it goes. And you're going to find out that it doesn't really work well. It really doesn't work. As a strategy, you cannot use that. Because you can see, just look at the charts. You don't need me to tell you, go test it. You're going to lose a ton of trades, both sides, and then you're going to get one of them that work actually, right? Even this huge one like here, right? Look at this here. You bought right here. You probably put a stop here. You may be lucky if you didn't get take out here. And you're pretty much lucky because most times they'll take you out and then go. Because they don't work. They literally don't work when it's in a consolidation. And most of you, if you know structure, you know you're in a consolidation. But if you don't know structure and all your trade is based on pin bars and you don't know you're in a consolidation, you're in big trouble. You're going to be taking a lot of losing trades before you realize, oh, the market is going nowhere. Because nobody knows they're in a consolidation immediately, right? If the market is trending very fast, you don't know that the market just suddenly stops and starts to turn into consolidation, right? And if you're not very good wave trader, you may take a very, very, very long time to realize, oh, the market is going nowhere. Because by the time the market shows you that it's going nowhere, it's a little too late for you to realize it. It's actually going to start moving. So that is why you don't want to take pin bars. You don't want to change it. And this is one of the things I do, in all my trades. When I say don't use it, I do a test, like the test on the support and resistance. Here's a test on the white pin bar is a bad strategy. Use a line chart. The data is the same, right? We haven't changed the data. We haven't changed the structure. What we change is the design of the chart. And you notice what happened, right? Your strategy just went away immediately. But guess what? You notice the buy setup did not go away, right? That buy setup didn't go away. This can work, right? You still see the structure. It doesn't matter what's the design of the chart. You still see the structure. That does not change. If the structure was changing with the design of the chart, then something was wrong with that as a way of trading. Right? So we will talk about that on the last day when I will be doing a wave. I'll be doing a day when I'll be talking about the Elliott wave. Keep the questions for there. Keep questions and structure for there. We'll talk about it there. So you can literally see the structure here, right? But you can't see pin bars. They're gone. You can choose any other design. People trade Renko bars. People trade, and you don't have pin bars, but you can still see structure, right? Well, this is a high time frame Renko, but you can see in here the pullback, that one candle pullback in the Renko. This is just high time frame. That is why you don't see it. You go to lower time frame, you'll see a whole consolidation in here, right? You can see them. Structure is still here. See that structure is still here. It doesn't matter. You will still see the structure, right? And as long as you can see the structure, doesn't matter what you use, then that probably is something you can trade this, by the way. Just bars, empty bars, right? And you can still see structure. So this is where you go. If your strategy is based on the design of the chart, it's probably a poor strategy, right? You don't go and buy, you don't go and buy a house because you like the color of the house. Well, some people may do that because some people still trade pin bars, right? So some people may go buy the house because of the color, even if it's a rotten house. Exactly. So that's my warning to you, because there are traders who use that, and you got to be careful about that. Don't use it as a strategy. It doesn't work. See, that's all you need to know really about pin bar. Show you what it is and what is it. So let's use today more constructively. There was one question somebody was asking today about, if I can remember, what was the person asking? Can you, let me just go back to that question. I said we'll do it. He was asking about oversold, overbought, and oversold in currency. And in terms of, for those of you now join, in terms of stocks and all of that, you can have overbought and oversold. In terms of currency, it's a tough one to say. I think you will be fooled, or you will be misled if you think that you can look at currency in terms of overbought and oversold, right? Because let's say the US dollar, when you can call the US dollar overbought or oversold, that doesn't mean anything. It's the circulation. The currency just keeps circulating. The same amount keeps circulating. The only time I would say it's getting worse, or the currency value in terms like the amount of currency changes, is if they're printing new ones and they're actually loading those new ones into the economy. Then you can say, well, we're having an overflow, not overbought or oversold. Price goes up and down and the currency doesn't mean it's overbought or oversold. It just means it's changing its value. And if it's changing its value and it's devaluing into one direction, it will keep being oversold for you for a very, very long time. You want to look at the yearly pound chart. That thing has been oversold for a very, very long time if you look at it. And it just keeps going down and down and down. So what do you do? Start buying? Maybe very soon, but do you start buying because you see an oversold? No. It doesn't really give you very clear vision. You start buying when you see that the buying power or the selling power is dying out, which means the volume of sales that are coming in, the volume of contracts that want to sell is less than the volume of contracts that want to buy. The MACD is good enough for that. The RSI is good enough for that. There are a number of tools that are good enough for that. To tell you, there is divergence. Volume is dying out in one direction. It's probably going to have a turn in the other direction. But not every time you see divergence means that the market is turning. It means the market is making probably just a consolidation, just a correction. And if you can't read into the structure correctly, you may mistake a correction for a change of direction. And traders do that very often. They look at divergence in the MACD. Oh, it's divergence, I'm buying. And it goes up 4 pips, 10 pips, 20 pips, come back right back down. Because it's just making a consolidation, not a change of direction. So let's go look at charts and then I'll take some questions, right? I don't think there's questions in pin bar. Believe me, it's so easy. There isn't much question in pin bar. Questions will come closer to Friday when we start really talking about structure, right? By the way, I can tell you what moving averages also, since we have some time. Here's why I don't use moving averages. They're lagging. They're lagging very, very seriously. What is a moving average? I think all of you know. I don't have to give you the definition of what makes it. Pin bars, is it true? Meaning nothing as well to shadow and engulfing strategy. Pretty much the same thing. It means nothing. It's a remember, candlestick is a design, right? It's just a design of the chart. Engulfing candles, as I say, okay, take an hourly engulfing candle, move it to the 4 hour and see what happens. Or move it to 15 minutes and see what happens. It's no longer engulfing anything anywhere. It's just the way the market moves. When the market is in consolidation, you're going to have a ton of engulfing candles. So look at this. Here you asked me the question. I'm going to show you one right here. You see that engulfing red candle there? Would you sell into that? Where would you put your stop? Above the top? You can kiss that trade goodbye. You see? I didn't even have to go far to show you. It doesn't mean anything. We can go and find a number more. Here is a nice engulfing one. This is more than engulfing. This has 2 pin bars at the top and a big candle here. Would you sell here? That has everything you want. Engulfing, pin bars, everything. No, you wouldn't, because that is a bad thing to do. If we want to find some more, let's go find some more. Look at this one. Well, this is not exactly engulfing, but it's a clear reversal. This one didn't go all the way to the bottom, but you would look at that and say, oh, that's a good reversal to sell into, right? if you're an engulfing candle trader, right? And look at us. I like that one, but well, it doesn't work. We can go and find some more. Let's go. Look at this one, how huge this engulf. Look at this. See? Look at the green candle and the red candle there. You really want to buy at the top here? Bad idea. You'll go nowhere. First, you will never get to your target, and this one is going to take you out. Right? So it really doesn't work. Don't try to use it. Right? Just think of it this way. If I'm going to look at candlestick as a design to trade, let me switch to line chart. Can I trade my strategy anymore? Remember, the data you have is the same, but your strategy disappears. So that means that strategy may have little value to it. It's that easy. I know one guy who likes to look at red and green candle. I tell him you should make all the candle white. Make all the candles white. So you stop looking at red and green candles because you're looking at the wrong thing. You're looking at the color of the candles and not the structure of the candles. Right? So what you need to look at is the structure of the market, not the color of the market. The color is just, in one flash, we can see the direction it's going, but you can see it even if you don't have colors in it, right? I'm pretty sure you can see the direction if you don't have colors. It just look very nice like this, right? Basically. So, is there an advantage using the Japanese candle trading relative? Here's the thing. It's like, is there an advantage to ride a tricycle if you can ride a bicycle? The question is like, if you understand Elliott wave structure well, you don't need to use anything else with it. You don't need to go look for pin bars. You don't need to look for support and resistance. You don't need all those stuff because you're at that stage where you understand the structure of the market, right? That's it. So when you learn to ride a bicycle, you don't go back and just add some more wheels to it. Right? You don't have those safety wheels. These are like safety wheels. These are very simple technical tools that says if you can't understand the structure, pick something that works and trade it. Right? Basically, what traders are doing. Think of yourself. Think of what you did. You came into the market. You look at the chart and you're looking for something that gives you a clue where you should buy and sell. And if you know nothing about structure, you probably like the pin bar because it gives you a clue. You win some, you lose some, you end up losing your account. You hear about support and resistance. You go and you start using the support and resistance because it looks good. Sometimes it works, sometimes it doesn't work. You trade for 6 months, you lose your account, right? And then you start searching for all those. You know why I know that? I've been there. All of us go through that process of picking the simple things first until we can go to the more complicated ones. We all trade support and resistance. We all trade pin bars. We all look for all those stuff in the charts. And then we put all of them together to see if all of them together can give you a clue. And all of them together give you some really confusing clues. You're totally confused. And then you decide that, look, here, this thing has more to it. It cannot be so simple. Trading is not a simple profession. It cannot be simplified to a few lines or a few pin bars in the chart. It cannot be that way. Don't let people tell you that. Those who told you that it's simple as that have no idea what they're saying, what they're talking about. Because it cannot be. If it was that simple, we will all be millionaires. Everybody would be trading. You know it's not that simple. It has to be much more complicated than that. So it is complicated. It is not that easy, but you can learn it. Anything that is complicated, it can be done, right? People do complicated things. Not all of us can do it, but people can do it. If you put your mind to do it, you can do it. If you decide to put your time to learn it, you can learn it, but you will need to put that time in. It's not easy. You can't buy 6 videos from somebody for $500 and learn to trade. If you want to become a sportsman, I don't know, play football, you can't go buy 10 videos on football and learn to, and become a super athlete. You just have to go into the field and start kicking. Practice, 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 and get yourself a good coach. And maybe, just maybe, you will become very good at it. But there is no other way around it. You cannot just look at the game and become good at it. You got to be in the game to become good at it. There is a good reason why the Russian football team actually hired 3 different international coaches to come and coach their team. But guess what? All three of those international coaches they hire were renowned coaches for bringing teams that are unknown onto the stage of the world, onto the World Cup. One of them brought South Korean team into the World Cup. They said we want that guy. One of them brought, I think, was I can't remember what was the African team, but one of the African, totally unknown. One of them, I think, brought the Saudi Arabians to the World Cup, and they were like, let's get that guy. Three of them they tried. And the Russians are pretty good. They're known. You know, the team is known. It's not like it was so much unknown. They make it every now and then there. But that did not change what happened to them. They never got to that level where they wanted to go. Do you blame the coaches? Those coaches were really good. I mean, really good. They were high class. They were paid huge sums of money. It still didn't help these guys. So just maybe, like I said, just maybe you will get there. So don't believe you're going to magically get there. You have to do the work. It's up to you to do a lot of the work, but you may and you will need education. Because without that, you're never, ever going to succeed. Just put it that way. Without the education and the training, you just will never, ever succeed. You can never become good at anything if you don't know how to do it. That's just so simple, right? You don't just, watch films of how people do operation and you can go and say, oh, well, I'm a doctor now. I could go do that operation. I mean, it looks simple. The guy just took a knife, cut the guy open, take out the appendix, cut it off, and then stitch it up. And, well, I could do that. I mean, what part of that you can do? Right? It sounds easy, right? What part of that I can do? Stitch, I can stitch. Basically, nobody will put you very close to a hospital, much less to become a doctor. So you have to have the knowledge. Knowledge is important. So let's go. Let's move on. Charts. Let's go through the charts. Now, dollar index. Yesterday, we were saying dollar index has some more downside, but it's going to find the bottom here because of the structure. And I think we may be finding that turning point. So euro, same thing, possibly more up. Euro still looks like it's pushing some more up, but you can actually see. You can see that the weakness is coming and the volume is dying out. You can see that. You can see that the market is not very impulsive. It's not going very strong. At some point, it will turn to the downside. I don't think that the downside is going to be a sharp impulse. I think the downside is likely going to be a corrective structure. For now, we would want to see how it develops, but I have a very strong belief it's going to be a corrective structure for one more impulse up. That doesn't mean we don't trade it down. We start trading into it, and if we don't like the structure, how it's going, you take a break-even trade, you get some small pips, and you get out of the trade and wait for the impulse, right? There is a chance, and I'll just tell you why I don't think so. Starting from here, there is a pattern that could be a complete corrective structure in here. But if you start the market from here, if you start that corrective structure from here, this is only one part of it, which means you're going to look for a second part and a third part. Right? Possible one out of those two structures. How would we know which one? Because of the expansion of the market. This is what we call an expansion, when you break the low and then you go up. Because of expansion, you can only confirm that when you break the low. So there's a far way to break the low, we will start selling it. When we see that the sell setup is there, we will start to sell the market. Structurally, this will come down back. And let me show you in the daily why we are also thinking so. If you look at the daily structure, you've got a move down, you've got a 1, 2, 3 corrective structure, right? If you pull this down here, we've got a move down. We're looking for a possible 1, 2, 3 corrective structure. And then we'll possibly be looking for one more move down. This move could be the start of an impulse to the upside in one case, if we think it's a leading diagonal to the upside. It possibly could be a leading diagonal to the upside. If you're an Elliott wave and you know a few things about Elliott wave, this could possibly be a leading diagonal to the upside, looking at it as 1, 2, 3, 4, 5. But we will get the confirmation of that only after we have the corrective structure and the next impulse starts to go. Only then, and only then we will know. But can we do a forecast? We can make a forecast, and then you watch to see, is the market actually giving you that corrective structure? And if it's giving you that corrective structure, then you said, okay, great, I know what the next move is going to be. See? See how it is? It's more about what the structure, how that structure will develop. And once you can see how that structure will develop, you will be able to forecast the next move. That's how you make move. We don't guess. We don't just come and draw lines in the chart, and arrows in the chart by guessing. We're actually forecasting that this structure could be this. And we will do that because we already have a number of structures that are giving us an indication what the future structure could look like, because there is always going to be one bigger structure you're trying to complete. And by trying to complete the bigger structure, you're going to have smaller structures inside of it. See? Basically. So you still have to go study structure. You don't have a choice. You still have to do that because that's the only way you're going to learn it. Let's go look at it. Pung. Pung literally is telling us the same story. We've got an impulse down. We had a 1, 2, 3 structure, and that is why we knew, not this one even, we're looking at a bigger one. We have a 1, 2, 3 structure here, a 1, 2, 3 structure here. And that is why I think we're making a 1, 2, 3 structure here. All right? And probably one more down before we go up. So if you guys hold the questions, because I can't read them now, just after this, we will go to them. So where would the Pung go now? I think it's still more upside. Short-term downside, put it in a 4-hour. Short-term, this thing could come back down because the up move is corrective. So short-term, we could see this move coming back a little like this, and then the next up move. So I'm looking for a short-term corrective structure, and if we get that short-term structure, we will be buying into this. Right? It's easy. Once you start seeing, like, let me put it in the daily back again and show you why we knew this, why I know that this structure would be going down. Right? How do we know that this is a corrective structure and it will be going down, right? We saw the breakout. We thought this was going to go, and then the update, follow the update. You see what happened? It came down. It went up first. So follow the update in the charts, not in this one. There's an update on the 4-hour right here. Probably the 4-hour update. Let me bring it down. That shows us that pullback is likely going up right here. Right? Once you saw the structure and you figure out what structure you're looking at, you know that that one has some more upside, and that's exactly what they did. They went a little more up, make that C wave, and then reversed it. Reversed the market. Well, all of us know what happened, right? So we don't have to go and click on it. It went up a little more from here. They made that. This was when I posted this final one, this little move up, and then started to drop. Right? So what you're making, the forecast is based on the fact that this pattern, regardless of what this pattern, will go down. It's the same thing you do on all time frame. The forecast will be based on the fact that this pattern will go down. Now, for you to be able to do that, you need to know the patterns, and you need to know what patterns you're looking. You need to be able to read the patterns correctly and see them correctly. And that is what you're trained to do. To see them correctly, read them correctly, understand them correctly. That's what we train you to do. Because a lot of traders look at this chart and they can't tell anything. Right? It's not that easy to tell. So let's go. Watch this. We're looking short-term upside. You may get some consolidation in here. I'm not sure whether you want to trade it, but there could be some consolidation here and then upside. There's a possibility that we might get a trade in there. Not the best trade. Aussie. Aussie definitely going to give us a trade very soon. You can see that, right? And we will be looking for a corrective structure. I think this will also make a corrective structure before we go back up. Now, in very rare cases, very, very rare cases, you see these patterns just break out. You will never, ever trade that pattern for a breakout. Never, ever trade it for an up move until it breaks out. Make a consolidation and then go. Because once you see a pattern like that, 90% of the time, they're going to come down first. They're either totally going to come down based on what structure you're looking at, or they're going to come down as a corrective structure. Right now, I think they're going to come down as a corrective structure because we are looking at a bigger structure like this. See? This bigger structure tells me they're not going to totally fall. I see people already forecasting, oh, Aussie's going to go down. Well, yes, if you know what you're looking for. But I don't see that coming right now, because based on the information that I have, the structure that I'm looking at, that's not what it should do. Right? I will be in this sell. And if it does that, I'll be pretty happy. But I don't see that coming. I see a corrective structure coming, just like I saw this one here. And I saw this, and we saw that down move coming, right? Same thing here. We're going to look for this structure to make a corrective structure, and then one more up. At this point, they will talk to us. Either they break out or they go back down for a fifth wave. Question from James is, does any structure just means pattern? Yeah, they mean pattern, but they're not that easy to see, and they're not that easy to read into. You know, people see me put lines, and if you go on TradingView, you will see a lot of charts that sometimes I myself look at it. Did I post that stupidness? And then I look again. Oh, that's not my chart, right? I really, you know, they color everything, the lines, everything, flash at me like, wow, and wow, why would I post a crap like that? And then I look back and say, oh, that's not my chart, sorry, right? Because you have to know specifically what you're looking for, not just putting lines in the chart, but what are the patterns you're actually looking for, right? And you must know how they behave, right? If you know that, if you can actually know these patterns well, you can tell how they behave, you understand the structure, well, then yes, you can make the forecast. And that is a problem, that most traders look at these patterns, they don't have a clue what the pattern is doing, or they don't have a clue what pattern they're looking for, right? So making forecasts becomes impossible for them. And then what they say, well, you actually don't have to be you don't have to make forecasts to be a trader. And that's where I'm like, okay, what do you do? How do you buy if you don't have a forecast that is going to go up? And how do you sell if you don't forecast that it's going to go down? Or why would you sell something if you don't know that it's going to lose value? Right? The reason you sell something is because you think it's going to lose value, and that is a forecast. Now, you must have a tool that tells you that that could happen, right? The tool we use are the wave patterns that tells us with very high accuracy that that's what's going to do, right? Can you guys keep the questions to the end? Because if I start reading questions, we will not go through the charts. Let's go through them. Just hold your questions. You can when I say question, you keep them, you retype them. Let's go. New Zealand, we're looking for simple, same thing here. Looks very much like we're going to get one more down. Like I said, it's always a 3 or a 5. It's always a 1, 2, 3, a 4 or a 5 or a 3. They will have to break out of here, consolidate here before I buy. Right? So if they do that, we'll look for buy setups. Actually, we're looking more for a sell setup. I'm more keen on a sell setup. So keep your eyes on that one. Aussie CAD, I think this looks like a consolidation. Very much so in a 1 hour. We're coming down again. I'm not interested in this short-term sell right now. They will have to break out of this structure before I do. So right now, there's a possibility they come down here, go back up, and I'll be looking for the buy. If they consolidate here, I'd look for the buy. If they break the low, and they will have to break the low and pull back like this before I sell. So I'm not looking for a sell in the CAD. I'm looking for the CAD to go one more up. Basically, I like to sell the CAD, but I like to sell it from the right place. I'm not selling it from there. I would like the CAD to come back into this area, and I'll be selling. Right? All of you know that. If you're following me, we sold here, we sold here, we sold here, we sold here, we sold there, and we sold here, and we sold here, and we sold here. So we will sell here, and we will sell in the way down, and we'll keep selling and selling and selling, because this is the last wave up. If this wave goes up, it completes a 5-wave pattern. And I think that 5-wave pattern ends the structure. So there should be one more big impulse to the downside. Even if it's going to go back up, they will have to minimum come to about this low. And maybe lower. I think lower. But minimum, we would like them to come back to the low. So there's a very big move coming in the CAD. And if you with me for a long time, we're going to get it. Right? It's just a matter of time. We will still buy if we get this move, and then we'll start to sell. Swiss. Coming down some more. Yesterday I said, watch it, it's coming down some more. It looks like they may get a one more short move. I'm still not interested in the short move. Let's wait for the upside and then we'll see if we get a good trade in it. Yen definitely came. We're expecting them to break this low, and I think they may tag that low. And when they tag the low, we'll be starting to look for upside possibilities, right? So short term was a sell. If you're in the sell, you're probably still in. If you took the sell from the top short term, you're still in. You can wait for them to break the low. If not, they'll take you out for some pips, and then you can start to look for buy back to the top. I don't think this consolidation is over. I think if this move goes back up, we'll get something like this, and then we could get one more down. We're more in a longer term consolidation in the end. I don't see big downside right now. If you shorted now, that's a dangerous place, Michael. Michael, you're kidding, right? You're having fun. You shorted not now. Yes, let's go. One. Okay, this is a nice setup. If you bought earlier here, you have to be careful because then you'll have to use a stop. Remember what happened to us and use a stop somewhere at this low. Remember what happened to the Euro and New Zealand? We'll come and look at it. They made 1, 2, 3 up. They actually broke the top and then came back down. Well, I see a similar structure here. We saw this morning in our trading room. So we took that room, we took it off, and then we're watching. Or if you keep it, you keep a stop here because this is likely going to come back before they go. We're looking at a deeper correction. By the way, this chart likes to make those deep corrections. I can actually show you somewhere that they did that. We were trading this. Well, I'm not going to even go with this. I'm going to go with an earlier place where we were trading that pattern and they just keep making those moves wonderfully up. It actually trend very nice. Euro Oz. Let's go back. Where was it? Let me go to the daily and find it. So then I'll come back up. This one. This one. See this? That was for a webinar, right? Telling people that watch this pattern here from here going up. That move. See that move there going up? Went up pretty nice, right? Perfect. Well, let's look at it and how it went. When this came, the first 1, 2, 3, we actually bought here. And then it keep going before you get that trade. It made a 1, 2, 3, we bought here. It actually came down lower and then go. Right? This was the piece that confused us. After they made this move, we exit. We thought we were going to get a 1, 2, 3 here before they go. And we missed that part completely. Because they didn't give us a 3 to the bottom here, they just took off. Well, we got some nice pips in that piece, but we missed it. The sharpest and the fastest one, we missed it. Because I wasn't expecting, I really thought that this would have come a 1, 2, 3 here, a 1, 2, 3. Well, there actually was a pattern in there. We saw it very late, which was this one. A running flat, but we saw that a bit late, and I think pretty much we weren't that so far back. We weren't that good yet at wave patterns. We were just learning it very much, but it worked. So if you come back here, you're looking at a similar structure. Put it in the weekly. Just for your sake, I'll do it for you guys. Put it in the weekly, and we're looking at a weekly corrective structure to the upside, a weekly impulse to the upside, sorry. This is a big weekly corrective structure, so we're looking for an impulse to the upside. And that means you're going to have some nice moves going up if this is the start of it. Now, how would we know that that is the start of it? We don't know. You don't have to know. You will take every one that seems to be starting the up move and one of them will go. You still make money on the way up. So remember that those big consolidations they make and then they go. So you don't be surprised if you're here for a while and then it takes off. Right? So it is likely going to do that. And then you'll get a number of them going up. So you will have a number of trades. If this one is going to go up, you're going to have a lot of good trades going up with it. So be patient because there's a next one coming. That is this one. Very similar structure. You can see this dying out there. You can see the divergence in play. You can look at it on the daily. You will see it even better. You can see the divergence in play here. You can see that the market is not going very aggressively to the downside, which means it's likely going to go up. Now, they can come retest this low, right? The first one, remember, we were thinking this one was going to give us the breakout. It came retest the low. Actually, from here, if you look at it from here, we were thinking that that buy is going, this buy is going very strong, right? This is ending and this one is going to take off because you can see the structure literally telling you it is going to take off. And then they came to test the low, they make that. We saw the downside here. This was easy to see. And then they took off with that one. I was like, okay, wait for a flag and then go. Well, they didn't give us the flag. They actually came down more, right? Retest the low. Same thing here. They broke out of this, wait for a flag, and buy the breakout. Well, we are trying to buy an earlier breakout on a lower time frame. And that is buying this breakout. We actually took the loss yesterday. It was a very small trade in a 1 hour. We took that breakout and we closed it right there. It took us out right there. That was a small stop. It's coming back. And the reason we took such small one is because there's a good chance for it to come lower. So if it breaks that level, we're not going to be in a trade. You don't want to be in a trade that is going up. So right now, there's a possibility for them to retest this low again. And if they do that, if they come and retest the low again, well, from here is a better opportunity for a buy. This structure will go up. It's a matter of time. We're looking at a weekly structure, so it may take a couple months more to even do that, but it's going to go. So you can easily do this. And once all of you know that you look at a structure like that, it's telling you upside, right? If you've been trading technical trade for, I don't know, a month even, you look at that and you said, okay, that looks upside, right? So maybe right within this structure here, we're going to get some more, but eventually that goes up and you don't want to miss that trade. So you're going to keep a good eye on it and you're going to watch it for entry points. And if you have very good strategy, you probably get one of those from the bottom. It's not only the euro, there's a New Zealand in there. So even if the euro does nothing, right, there's a New Zealand inside. So even if euro does nothing, New Zealand could probably be the driving factor. We don't know what will be the driving factor, right? I want to show you guys the punk trades. There isn't anything much interested in the rest of them. I want to show you the punk trades because the punk trades are showing potential for short-term trade. Right? Short-term trade to the downside on the 1 hour, potentially look at this. It will have to break this structure. We'll have to break and make a flag and you can sell. Short-term trades. This one, wait for the breakout. It could break out, and if it breaks out here, so if it breaks out of this structure, it's downside. Remember yesterday I said, watch it for the possibility for downside. What you would like to see here now is a flag, and they're probably doing that. And you have a good trade setup. Nice short-term trades, right? You're looking at the pound chief. Same here, you would have to let it break, consolidate, and you get a short-term trade. These patterns are showing you downside. You need a flag here now. If you get a flag here, you get a trade to the downside. Pound yen. This one will come down, but it's also short-term. I think this is making a 1, 2, 3 wave pattern. It's going to go back up, but this is downside will be short-term. So if it goes very nice, you get a good trade. If it doesn't go very nice, which means it's, it start to do things like this, you'll probably not get a trade. You'll get a break-even trade. I mean, in very good conditions, you get a break-even trade. You may even take a loss or two if it's very small, but then you get the bigger trade. So I'm thinking this is going to go up more. This one will go up more. They're just making a consolidation at the top there, right? So wait for that consolidation to over, and you can actually buy into it. You can pull this straight across here and then buy the break of the top. What else? Punkad. Kind of going sideways right now. So potentially more upside, but this whole structure is showing you more downside. So wait for it to break, wait for it to make flag, and then you start shorting it, right? What else you want to look at? Aussie yen. The sell setup is coming. Remember, we sold it from the top here. Because this one is interesting. Let me spend some time more with this so you guys could see. So the first sell setup was in here when they broke that, right? They did make a flag here, but that flag never broke to go. That flag just give you 2 wicks out of the flag, and that is not something you're going to consider break of a flag. So they go like this. They go back to the top, and we took it from the top. They're coming down. Some of our traders may be in. Maybe they closed the trade already. But you're making a nice flag here. It looks like you're making a flag. So this could either go like that or go like this. This is the trade you want. Don't miss this trade. If it breaks, don't miss that trade. Because this trade is going to be amazing. Let me show you it in a 4-hour where the trade is going. 1, 2, 3 coming back to lower here. So this is going to be a very, if you're going to get a nice trade with an entry here and a stop somewhere here, this would be your target. You're going to get a nice 3, 4, 5 to 1 trade, something like that, right? So that one, New Zealand yen, not the best. CAD yen, not the best. Let me see what else. Aussie, New Zealand, very nice trade setup. They actually came back lower, but that did not change the structure. You still have a 1, 2, 3. Let it come a little lower and then start looking for that trade up. Right? That trade up is going to happen. Let me show you the structure here. One down, one up, one down. Well, the next one should be up. Right? Within this structure, this one should go up. So you can actually wait for it to break out of this structure, prove they're going up, break out of this structure. You can either pick the low if you're good at it. If not, wait for it to break out and then take the trade all the way to the top here. That is going to be a really good trade. Right? As you can see, we are already in from the bottom here. And we're keeping it to see how far it's going to go. Maybe I will have to close it up because we are changing broker. Right? We may have to close that and close everything and change the broker we're using. The broker we're using now does not have all the instruments we need to use in our trading room. So because of that, we're going to change. Some of the instruments we trade is not there. So let's go. Silver, watch this. Very, very high possibility for a downside. But if it breaks to the upside, we will allow a flag, or I will wait for a corrective structure before I buy if it breaks. But very, very strong potential for downside, which means if it starts to go down like this, you don't want to miss it. And you don't want to miss the trade to the downside. Gold, starting to look weak here, but we'll have to see. Right? If gold goes, it may not go very far. I think gold may go less than the silver, but we will see. It's still looking like, you know, they're trying to find that area. They're making volumes are still there, but eventually they should go. So let's see. If it goes to the upside, I don't see it. It's very short-term buy. All these were very short-term buys from here going up, right? Oil, I'll go to oil for you guys, looking sideways, which means very soon you may get a trade like this. Look for potential for this trade here, right? And UK oil is the same thing. Natural gas, let's see. Natural gas looking upside, so you can probably wait for a flag here and take this trade up to this level, right? You're making 1, 2, 3. So wait for that. You can probably get a trade there. I think that's about it for those charts. Somebody wanted what Nifty. Let's see what Nifty is doing. I think I have this, yeah. Upside, by the way, you got a nice flag. It's breaking, so you're going to go up more, right? This thing has potentially a lot to the upside, right? The only thing we thought it might have come back, but once they made that flag, is upside. We're looking for upside, right? So keep your eyes on that. Euro Pong, I thought we looked at that already. I even posted it. Euro Pong, Aussie Chief. Aussie Chief doesn't have anything interested in it. Just let it go. Euro Pong, I posted. I have showed it already. Same thing. Aussie Yen, we did already. Copper, yes, we can go look at copper for you guys, and then we can take some questions. Copper, let's see. Or I'll read the questions you guys have and then see if I can answer them. Copper, where is copper? All right, oh, this one. Stay out for a while. Long-term, long-term, they're making a correction here. Short-term, it's not ready for the upside. They may come back one more down. Right, we may come back one more down on it, and if we come back one more down, it'll be a good trade. If they keep going up, you'll have to wait until they break through all these stops before you buy. There isn't a buy setup on it as yet. Okay, let me go. One question. Really appreciate it. Do you think that for someone trading a micro account to learn trading, is the good idea just to focus on one pattern? No, you shouldn't. You should focus on the structure itself, not just one pattern. For example, just look at the studies, expanding flats. No, that's not a good idea. Study the entire structure. If you just look for one pattern, you're going to have a lot of miss. Because if you don't know the entire structure, you may think you're looking at an expanding flat and you're not actually looking at an expanding flat. You have to understand the structure, the entire structure. Yes, they will all be in YouTube. Any more questions? We just did gold. Let me see. Any reason why I still use red and green? So that we can see it very clearly. There's also a reason why we have a black background, because we can see, it saves my sight a lot when I can see a sharp bright green against a black background and a sharp bright red. Just that, nothing more to it. Maybe we see daily 4-hour structure in the stocks. Then if we do that, I don't mind doing it for you, send me directly. But if we do that in here, we'll have a next 100 charts to look at, right? One of the cons about Elliott wave is that structure can change itself. How can we deal with that? Yes, no, I think that's a misconcept you have, that structure changes itself. What normally happens, and let me explain that because that is good. But by the way, we'll do that on Friday, right? So in short, what happens is that sometimes you see a structure that is a tree wave. And most traders take a tree wave to mean the end of the correction. And they will start to buy into it. Like, for example, the New Zealand, right? Let me bring back that New Zealand. And that is not true. Actually, even Elliott said the correction doesn't have to be a three-wave structure. It could be a five-wave structure. A WXYXZ, go read the book, right? I don't know why traders keep insisting it has to be an ABC. And then they start buying and watch this move come back all the way to the bottom here, take them out, and now they don't know what to do. They're like, well, I had an A, I had a B and I had a C, so this one should go up. No, it shouldn't. You don't know that. And then it doesn't go back, it come here. So after ABC, where you put a D, and that is incorrect. And that is where they have a problem with it, because they don't understand the entire structure. People read the basic stuff and then they start. It's not that simple. Remember what I said. If it was that simple, it would have been simple. It's not that simple. So it's not just that the structure changes. It's the traders who are looking at the structure. People who you look at that were teaching you Elliott wave, or that you were learning from, were not very good at it. Put it that way. Sometimes we see a structure incomplete and we try to forecast where it's going to go, and then we get it wrong because it's incomplete. And I know it's incomplete. We take warning notes that, guys, this may just be a corrective structure up, but we will take the buy and see what happens. What are you thinking ending of X wave monthly? Oh, we will not discuss structure here in terms of our structure, because you have to know all our rules to do that. What is your thought? Okay, I missed the question. The questions are moving pretty fast. What is my thought on Ichimoku Cloud? I think it's just a set of moving averages, and I don't trade moving averages. They're lagging. What do you use as a confirmation of a structure is broken and you can place it? Oh, that has to do with your strategy, and that's something you need to fix. You can test that yourself. You can go and work around a strategy yourself. Not hard to do. Which broker do you use? I don't advertise broker. No need to look at that. What's your opinion about? You can, if you want a good broker, my broker may not suit you. The broker I'm using is the one where my investor has his account. I didn't have a choice in that. If I had a choice, I would not use that broker. What's your opinion about Heiken-Nashi charts? It's just a design. Again, there's nothing wrong with the charts. It's just a design. You can put any design. People trade line charts. People trade all kind of charts. They're not trading the charts. They're trading the information in the charts. So it doesn't matter what design you put. Like I said, if your strategy is based on the design, then you have a problem. Is it likely for the market to retrace after breakout? Oh yeah, they do. Because if the pattern completes, sometimes, like, that's a good question, by the way, and I think all of you should be interested in that question. The question is, let's say we have an impulse and we have a very, 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 very nice consolidation here. And we're making a target to about that level, let's say the 270. Now that's our target. That's not what the market target. But the market breaks out, comes to about this stop, and then turn. Well, you can't do anything. The structure actually worked the way it does, but it doesn't have to go to your target. 90% of the time, they do go to our target, but it doesn't have to. Well, in that case, there are two things you can do. If you're quick enough and you saw the structure, if it's a bigger structure and you saw that coming, you can exit for probably a small loss or a break even. If you don't see it coming, just take the loss. That's part of trading. Take the loss and move on. Next trade. That's it. Right? Those are when the times we get it. We take a loss and we just say, oh, wow, this didn't go to the target, but the structure behaved the same way we expect it to behave. It just didn't move. And sometimes you're focusing for a target like this and the structure takes off and do that, right? And you end up getting more than you expected to get. So that's also part of the market. You take it and you enjoy it, right? Sometimes, but you have to, if you're asking what's a strategy in entry, you'll have to go and test it yourself. Sometimes the impulsive wait is made out of flags. No, no, that's not true. That's very, very far from the truth. That means you don't understand structure very well. Impulsive wave cannot be made out of the flag. The flag is a corrective structure. If you're saying it makes out of flags and impulses, well, then that's a different story. But that will be of lower degree, right? You'll have an impulse, a flag, an impulse, a flag, and that will be all one impulse in a higher degree. Where can I read about Elliott Wave? The book is free. You can go get it. Elliott Wave Principles is on elliottwave.com, and it's free there. You can buy it if you want. You can buy the hardcover. You can buy it on Amazon. If you want to own it, that's okay, sir. On which day will you talk about the use of MACD4? Oh no, we don't have a webinar to talk about the use of MACD4. That is something we teach in our classes, so you will not hear that here. Does divergence helps in understanding structure? Yes, it does. Where do you learn from? Because it shows you that the market is dying out. That's easy. Divergence just tells you the market is dying out at some point. The problem is you have to know structure to know at what point it's going to die out. Where did you learn from? I learned from one guy, paid 5,000 to learn support and resistance, and then I decided to go on my own and learn, and I spent the next 2 years after that, not trading, but learning, 10, 12 hours a day, learning Elliott Wave, learning everything. I actually tried Elliott Wave like 3 times. I used to be like these guys, oh, yeah, Elliott Wave doesn't work, that's nonsense. That's my first try on it. The second try on it, oh, this thing is complicated, not going to work. And the third try was when I managed to find something to isolate what is a wave. And once I found that, that is what changes everything for me. It's like you can see the charts as clear as, as crystal clear as you can see, I don't know, you can see through water. It's very, very, it becomes very clear to me, the structure, right? And then you start understanding, oh, now I can see where people are getting it wrong. You can see where they're making their counts wrong. And we sometimes match it with counts that other people make, and we see where they go wrong, right? How do you consider whether the corrective structure is broken or not? Because just a week of a that's strategy. We don't discuss that here. What is the difference between ABCD and WXYZ? There is a huge difference between them, by the way. ABCD ERUs are actually for triangular patterns. Talking about brokers, do you suspect brokers bank and see the other side of the trade and use it info to manipulate the market? Yeah, I think this is a funny question, because, and I'm not laughing at you. I'm laughing at the question because the question itself, a lot of people say that. Here's the thing. What do you mean see the other side of it? You're actually giving them it. You're giving your brokers the information, because when you take a trade and you put a stop, you actually tell him where you need to get out of the trade. So it's not like they have to do anything secret to see it. You actually gave him that entire trade. You gave that information to your broker. So he sees it, of course, because you gave it to him. And if the market comes very close enough to you and your broker is dishonest, 2-3 pips, he can expand the spread and take you out if you have a dishonest broker, right? If the market doesn't come very close, he doesn't move the market. That's not what brokers do. Rarely there are wicked brokers who will give you a wick that doesn't exist there, right? And take you out. But it's not basically you. It's a bunch of orders has to be there before they do that, right? It's not like your one standard lot is there. There has to be, the broker itself has to see a ton of orders there before he gets to the idea of, hey, let's just move this thing 2 pips and take out all those orders. And why would he do that? Well, because all technical traders pretty much trade the same way. They put their stops exactly at the same spot, plus minus 2-3 pips, right? And that is why the brokers know, he can look at his platform and see where the bulk of those stops are. But it's not that simple the way they do it, as you may think, because they do hedge their risk and all of that. But, if brokers are dishonest, they look at your account and they decide whether to keep your trade. If they're honest, all your trade goes straight through. Now, I can't swear for any broker, so that's something you'll have to do your research on yourself. Look, it's like harmonic patterns, W under chart. Now New Zealand, I am not sure. No, this is not, I don't know what you mean by harmonic pattern. If you're talking about those advances, harmonic structured advanced patterns, right? Not really, because your Gartley pattern would have already been lost if you were using it here, because the first 1, 2, 3 did not go, right? It actually has a complicated set of 3 waves in there. CAD short term, we're thinking upside. I think we've gone through most of the questions, guys. I don't think we'll finish all of them. Time has run out. If we can, I can stay here, but most of the people in the room will have to go. They have things to do better than what just sit and talk about. Can you identify same structure in stock? Yes, you can use the wave structure to identify the same thing in stocks and any charts possible, because it's the nature of how charts move. It's not about any one particular chart. You can simply trade futures and exchange. If I'm a millionaire, I'm not sure what I should answer you. I'm doing pretty good way before I start even trading. I was doing business before I trade. You know that. So I made a lot of money in my life. Put it that way. Not as a trader. I made more money as a businessman than I made as a trader. How often you look at the chart? Oh, I'm in the charts 10, 12 hours a day. Until now, I still study a lot in the charts. There's no limit to what I can learn, right? There's no limit to what I don't think that what I have is the end product of what you need to know to be the best trader, right? There is still a lot to learn, and we do that daily in our group. I remember I told you guys we came up with a new strategy. That's not my idea. That idea came from one of our traders. Now we have traders who are working on different strategies as well in the group. Well, at some point, we are hoping they're going to share it with us in the group, and we will all have some amazing strategies to test and work with. There is no, there is no limit to how much you can go and learn on this. This thing is complicated. I keep telling you, it's not that simple. You have to learn, and you get better at it. I still get better at the waves at making those forecasts daily. Because there are times when I look at the structure and I'm like, darn, this thing is tough. I can't tell which is going to do right now. Right? I wait, and then I start going into different time frames and analyzing until you finally come up. Oh well, this is probably the pattern I'm looking at. Right? It's not that easy. It's not like you just come and you open the charts and in 2 minutes you can do it. Oh no, we have a whole group of people in the trading room looking at different instruments for us. People will remind me. You want to look at this chart? All my traders in the room when we do a webinar is going to say, we go through all of them, and then when we start trading one of them, somebody that's to the question somebody asked, how I keep an eye on all those instruments, right? We have traders that trade much more than that in our room. I mean, different instruments. We just don't look at all of them. We have traders who trade the Mexican peso, they trade the Norwegian krone, they trade a whole lot of different things, but we don't do all of them. But in the trading room, they can talk about it. How many different patterns are there? Not a lot. You can read the book. It's not that hard. There's not a question really to discuss. Or you can just go read the book. You'll find we don't use more than there is in the book. Actually, those are pretty much all. Sometimes you don't even see all of them. Okay, I think we can call it a day now. I want to thank all of you for coming. See all of you tomorrow, and don't forget to share the link. There is a friend out there who is looking for that link and can't find it. So if you invite him, I think he'll say thank you to you, right? So see all of you tomorrow. Take care, everybody. Bye-bye.